What are some of the lessons you've learned or rules of thumb that you have that you think might be helpful for others to learn from your experience and investment journey?
Despite all the nuanced and very detailed esoteric ideas we talk about today and elsewhere that seems very jargony, by far, we have an old article called something like the investment pyramid, where we were doing a riff on the food pyramid of our youth and how it's changed over time. And we said, if you look at the investing pyramid, like by far, number one, your base is how much you save and invest in the first place. So get started early, start saving, start putting it to work, because the magic of compounding accelerates over time. And you look at like the amount of Buffett's wealth that's been created, the vast majority of it has been when he's pretty old, right? But my favorite investing stat is Berkshire can decline by 99% and still be outperforming the S&P since inception. Like that sounds so false, but it's true. Listeners, go take a look. Anyway, so the first thing is save and invest in the first place, get started. Second is, this is a weird take, but I don't think it matters that much what you invest in as long as you start getting invested in cash flowing type of assets, stocks, global stocks, REITs over time, and doing it starting mentally low cost. And cost doesn't just mean expense ratio, it means commissions, it means trading, it means taxes, all that stuff. So you get that base into place and have the mindset of, all right, if I compound at 10% in 25 years, I 10x my money. In 50 years, I 100x my money. And so if you're a 20-year-old listening to this and you're like, oh my God, that $1,000, that's 100 grand in retirement. $10,000 is $1 million. And then the problem is you start to equate expenses and things you're going to spend money on with what is this worth to me in 50 years? So, hey, this vacation, we're going to Hawaii, 10 grand. We're like, well, that's worth $1 million.
Part of it is there's a, call it a get rich quick dynamic where people want to chase like a growth stock, let's say, that's fully priced consensus and prone for disappointment, right? Maybe that was Snowflake not too long ago.
There was a great article that was big in the academic community, and we had the author on the podcast, Hank Bessenbinder, which is stocks outperform T-bills. But then we asked him some questions, and I was like trying to tease out of him. I was like, what's the best performing stock of all time? Meaning the last 100 years since we really had data. And the answer was Altria, so a tobacco company. But the funny thing was number 2 and 3, most people probably wouldn't have picked or heard of them. It was Vulcan Materials and Kansas City Southern, right? A railroad. And they didn't do some crazy number. Like it was like 14 to 16%. They just did it for 100 years. And so the cumulative percentage for Altria was, I can't even do the math on this. It was 265,528,901%. So you put in, I forget what it was, like $1,000, you end up in multi-billions. So it wasn't that they were compounding at 50% a year, which is everyone. If you follow Instagram, these ads are like, this, invest in this self-storage facility, you're going to do 50% a year. I was like, you don't need to do 50% a year. You just need to do 10. You just need to do it for a while.
You'll double your money in 7 years. Yes.
And most people, that's what gets them tripped up.
I agree. It's so easy to hang yourself through our news. Here's the Old Dominion Freight Line. This is a boring stock that's done extraordinarily well. Another one is a beautiful chart. Right now, there's bear markets and corrections in there, but it's a company that generates cash flow, and it's not going to get disrupted by AI. I don't know it, by the way. I'm just supporting your point. Here's another one. This bank I actually do own, FCNCA. This is a publicly traded bank that's been owned by its family for a few generations, and it's beaten the S&P 500 in successive decades. They picked up Silicon Valley Bank. They got a great deal from the FDIC, and they specialize in bank takeovers. So, yeah, I think you're correct. Look, there's still a role for commodities, as you pointed out, CTAs and other kinds of commodities, digital assets, I believe, too. But things that generate free cash flow and can compound and reinvest and grow and build a great business with a moat and a brand, that's investing 101. And I think people just get offsides by trying to pull the forward too quickly, and they speculate, and you wind up getting a situation like ARC, which had tremendous inflows, and the average share price, I think, is still like in the 2018 levels.